know a lot of things. You have to be in the charts, watching it, paint, key off of specific times of the day. Look for things that have already occurred, which was what I outlined, the sell side below here. These are relative equal lows. We went down below it here. Beautiful delivery. That's precise. You can't deny it. Rolls back up in, and then one more time tries to make an attempt to go down here, but there's no reason. Why is there no reason, ICT? How could I trust that? How did you trust to talk about it? Because you could have did it wrong in front of everybody, and they could have been laughing at you. What I've outlined here, the sell side below these relative equal lows. It goes down to a logical level, not some random place, not some random zone. I didn't refer to anything harmonic down here. These levels were already on my chart when it went down there. And then taking your attention to that level right there, this failure swing, you can now anticipate them. If you have the backdrop, the foundation behind it, that we've already went below these lows for sell side, and it went to a level that would be expected. Think about what's going on here by doing that. I'm stating that the algorithm will go back down to this level, below these lows, go there and be content with that, and then look to do what? Reprice for an opposing liquidity or inefficiency. We had both, buy side and the remaining portion of that 60-minute fair value gap in the shaded area. I don't need it to go all the way up to the top. I just need it to go back to the buy side here. So smart money was buying below these lows. Notice it's doing that when it goes down here. This area here, which is the midpoint of this wick. Let me go back in case you guys just showed up. We were looking for this new week opening gap down here. It delivered it at 39.80 and 3/4. It came down to 39.50, 39.80.50. That's the low. Look up here in the upper left-hand corner. That candle's low is 39.80.50. One tick below consequent encroachment. That is below this low and this low. So the algorithm is remembering what? It's referring back to this low and this low because they're relatively equal. It does not know, listen folks, listen. It does not know your stop. It doesn't know my stop. It doesn't know how many stops. Your broker does. But the algorithm has no idea. It doesn't reference it like that. It just refers to these points, these PD arrays. So the market does what? It reprices back down below those lows, which is a discount, and consequent encroachment. They're all measurable. And there's no need to go back down to that low. Why? Because it's already repriced to the new week opening gap. And done what? The sell side has been purged. This is just returning back to a point of reference for smart money to accumulate longs. If they're going to buy here in their quote-unquote smart money, and they are using what I teach as a market efficiency paradigm, that means they're going to buy stops that are below the market in the form of sell side, and they're going to distribute their long positions to buy side that's resting above the market. Willing buyers at a higher price. That's these stops right here. So they're buying sell side liquidity below these lows here and consequent encroachment. They don't fear the algorithm repricing down here because they know it's already done its job. Big, huge step forward in your understanding about price action if you can see that. So if they buy here, and I talked about this live, it's not like I'm going back in time because it's already happened. I said this live here for you so that we can see it. The logic is real, folks. It's real. If they're buying that, what are they holding for? They're not holding for harmonic patterns. They're not looking for Elliott waves and all that other stuff. They're not counting waves. They're not doing any of that stuff. They're simply looking for the inefficiencies above the marketplace. Where is it in here? Nowhere. Here. We've already done that several times. Buying here They're going to go exactly where I said it was going to go. The remaining portion of that 60-minute fair value gap up here that hasn't been traded to, once it went lower here, we've only delivered one time here. We went up to a quarter of it here, which is, again, not random. Then it went to halfway, consequent encroachment, and then ran through it. Like I said, that's where the buy side is. So smart money buys discount, sells to a premium. Buy stops at resting above here. They knew those buyers wanted to buy the market when it was down here. When they're down here, smart money, the paradigm shift that you're being taught to have in looking at price action, because it's algorithmic, is you're buying it here with the same mindset that they have. Smart money sees this as buying sell stops at the most opportune time. It's the precise time, folks. It's precise. You can't make it any better than this. The logic is right there. And buying that with the expectation of seeing it go where? Right to those buyers that want to buy high. Now, they don't want to buy high to buy a long position. They have they have a short, and they're holding on to their position here. Maybe there wasn't a lot of shorts. It doesn't make a difference because the algorithm doesn't know the level of float that resides above that. It means the number of orders. How many buy stops are resting above that high? I don't know. You won't ever know. The algorithm itself does not know. Buying it cheap, selling it to people that want to buy it higher. Why? Because I'm targeting their inability to know how to trade. I'm targeting their shield, their defense. I'm busting it in like the SWAT. I'm literally going through it. I'm teaching you how to do that. I'm sorry if it doesn't meet the nice feel that you think investing is supposed to be about. It's not like that, folks. This is war. And when you look at the charts, I have absolutely no moral conflict at all about taking your money or anybody else's money when you're on the wrong side of the marketplace, because you all sign the same risk disclosures when you open up your account. Everybody knows that you're likely to lose money. So if I'm buying down here, I'm doing what smart money's doing. I'm told you that that's what's going to happen there. From here, watch that. And we want to see it deliver up to this area again, but more specifically, the upper half. Why? Because it only went to here, leaving from this high up to the high shaded area here. That's not been repriced to. We only passed through one time here, then up to a quarter. So think about it like this. The range on that hourly fair value gap has been repriced to here, right there at that moment. Then this high here takes it up to that level. So the remaining portion of that fair value gap, in my mind, I'm seeing that range left. I'm ignoring all this. So you're looking at all these things trying to guess which one I should have been looking at. I'm teaching you how to internalize it, because this is the part that the algorithm sees now. It doesn't need to look at all these other highs. This is the one that matters now, because it's traded up inside that old 60-minute fair value gap, but it's left in this portion of it where it has not redelivered to it. It's only been offered sell side. So the efficiency model is that price needs to trade up into that area and deliver price that way. It does two things. It does that redelivery and goes right for the buy stops I told you it was going to aim for. Now, isn't it convenient? Isn't it convenient that the market just so happens to run right up there, clear those buy stops, and now we're right back in the middle of the range again? Hello? Hello? Are you paying attention? Are you paying attention? Are you playing with your Game Boy? Are you texting your girlfriend? I'm listening to this guy go off on YouTube. No. You need to be paying attention, taking notes. Folks, this stuff repeats every friggin' day. Every day. I talk about it in Twitter. I tell you exactly what candle to look at. I tell you exactly what it's going to be aiming for. I've been doing it for months. My private students have watched me call this on a daily chart, just the same way. And it can be done on a 1-minute chart, 5-minute chart, second chart. Yes, that's less than a minute. You cannot Absolutely cannot find anything fucking better than this. I'm sorry. This is perfect. This is the market. And if that upsets you, I'm sorry, but you're going to have to grow up. Because if you really want to know how to do this, if you really want to know how these markets book, you came to the right place. Mr. Wizard's World. We're here. We're here every day talking about the technical science and the stuff that really works. And it's undeniable. It's unrivaled. The precision cannot be found anywhere else. And that's awesome. It's encouraging when you see it, when you finally get your hands on it and you see it unfold day after day, week after week, month after month, year after year. It's infectious. It's intoxicating. You become an alcoholic. You can't imagine doing it any other way. Even in this sloppy range like this, folks, even in a sloppy range just like this, it's not chaos. It is not chaos. It's all scripted.